Good morning, good morning. Welcome to the Real on Real Estate, Real People, Real Talk, and Real Estate Radio Show. I am Dr. Karen Lewis. I am the host, and with me today, I have take the mic, I'm fast.
Good morning, everyone. This is the co-host of the Real Estate, Real People, Real Talk about real estate and so many things. Tamika Moses here with broker owner of Robinson Realty, and I can be reached at 954-404-4646. And Dr. Karen, we're going to toss over to our special guest again for our part two of our credit.
We are, but I forgot because I hadn't been on here last week. We're sponsored today by Urban Real Estate School and phone number 954-371-4021. And I am also a real estate broker. And we had such a great show about 2 weeks ago, and we just had to bring this guy back. He is a credit guru, but I'm going to let him introduce himself to you because we're going to have some fun. But make sure you get your pen and paper because you're going to take some notes because he's got some golden nuggets and he's going to drop it like it's hot today. All right. I guess, go ahead. Is the mic
Good morning. Andre Coakley, president of Credit 360, a local credit repair company that has a passion for helping individuals such as yourself get back on track from a credit standpoint. Feel free to reach me at 305-235-4848. Once again, 305-235-4848, or on the web at www.credit360.biz.
Oh, wow.
Oh, wow.
Wow. Can y'all hear him? It sounds like he's talking a little low for me. All right then. Okay,
he got it.
He got it, Madam President. Okay, he got it. All right, so we did a little quick video, and I'm going to start. I want you to just tell them, just in case they don't listen to this, the ones don't listen to our video, give us that quick nugget. It's getting ready to become, it's the holiday season in a month or two, right? So now what we want you to do is give them a nugget, and then we're going to jump into business credit.
Well, that nugget is going to be most definitely is keep your utilization down during this holiday season. As we approach the season, unfortunately, because of inflation, the price of goods are going to be a little bit higher than normal. And what we're seeing is trends is that we're normally putting these balances, we're not pulling it from the savings account, we're pulling it and putting it on the actual credit card balance. So keep your utilization low, try to keep it in line so we can go into 2025 actually with good credit and be able to be useful and bless you.
Mm-hmm.
So in other words, don't use those credit cards for Christmas, okay? Don't use them. Don't use them. Try not to. And what you can do, just keep it simple. Just start saving you a few dollars every week when you get paid. Start saving your money so that you don't have to use your credit cards this season, okay? Make a change, and it's going to all be up to you. Madam President, you got any questions before I jump right in?
No, I don't have any questions. I'm just blessed to be here today. I had a little fender bender yesterday, but hey,
yeah.
I'm blessed to be here today.
That's right.
Yeah.
That's right. Thank God that you are here
Yes.
today, because we need you. Amen. All right, so business credit. Let's just talk about business credit. When we're talking about business credit, tell us about the credit score when it comes to business credit.
Well, the business credit platform is graded a little bit different than the actual personal credit platform.
Mm-hmm.
Business credit runs on the platform. Well, I'm just going to say the Paydex score, which is the Dun & Bradstreet version of it. The actual score that you should be trying to aim for on the Paydex scale is an 80 score. It goes from 0 to 100. When we're talking about personal credit, that credit scale goes from 300 to 850. So even though they're kind of looking at it from the same kind of, data points, however, they are rated differently based off of that grading scale. However, business credit should be a tool that all businesses take advantage of. What we're seeing in today's time is, unfortunately, a lot of businesses don't have the documentation and they're not prepped and preparing themselves to be getting access to funding from longevity standpoint. Unfortunately, during the pandemic, a lot of businesses realized that they weren't document ready because they weren't able to take advantage of some of these PPP loans or either these type of funding sources or credit sources that are available to them or grant sources. And when we're talking about credit, I normally try to say the first thing you should be doing as a business owner is trying to get access to grants, right? That's the ideal. way of getting access to money, not credit. Credit should be a last resort if you can't get the free money first.
Quick question, with the 80 paydex score, what does that is equivalent to? Because some people, they hear 80, they're like, oh, I want to need an 85. So what is that equivalent to in business credit terms?
Well, like in personal credit terms, so 80 paydex score is considered almost like a 720 credit score in the personal credit realm.
Okay.
It's going to have you in the A category. That A category is saying that the business is pretty much credible, loanable, and possibly fundable.
So I actually, me personally, I have to work on it because I had an 80 credit score, and because I went on a franchise from my older company, and now I have a 40, but I don't know why I have it because I don't recall me not paying anything. So that's what I'm working on right now, because you really have to pay attention, because honest, I don't know what I didn't pay. Because I think I pay all my bills, really.
Well, what happens is most likely you might have a split credit profile on the business side. The business credit profile is a little bit different than the personal. With business, the profile is actually constructed by the business name and the business address. So hypothetically, I can go online if I had access to a business credit pulling platform, and I can pull your business credit profile just based off of the name and your actual address. I don't need your consent like with personal credit. Personal credit has consumerary laws. I need your consent to run your personal credit. I don't need your consent to run your business credit. And with that being said, most likely what's happening is you might have a split credit profile while some of the data from your credit from the original business is still on the original credit profile. However, the new business that you're acquiring is on the new business credit profile, and therefore that might be what we call a thin credit profile on the new business. It's not that it has bad credit, it has thin credit.
Thin credit.
So it's like a freshman and the senior. They both have a 4.0 GPA, but that freshman's a lot strong. That senior's a lot stronger than the freshman based off of tenure of time.
Wow.
All right.
So, but I want to go backwards just a little bit. What are some of the things that people need to have in order to be funding ready, whether it's grants or even business credit? Because during the pandemic, we saw a whole lot of reels and everything across social media. Go get an LLC and go in the bank and get $100,000 or $50,000. And most people don't know exactly what is need to be in the setup of just pertaining just to having the LLC. It's easy to go and incorporate online, but what are the things that the banks are looking for, even funding sources are looking for?
Great question. The banks are looking not only for the actual the business, the formation of the business. The business has to be the correct formation. A lot of us are running sole proprietor businesses where we're kind of in business but not in business. Ideally, I would normally try to have the average business owner try to shy away from that business designation. That designation, unfortunately, doesn't have, let me give the disclaimer. This is not considered legal advice or attorney advice. I'm just giving y'all based off my personal experience.
Right.
However, the sole proprietor designation doesn't have the tax benefits, number one. And then number two, banks and lenders don't want to necessarily give a sole proprietor access to credit because you're saying you're a sole proprietor. It doesn't show a lot of business growth if you're saying I am the business, because a sole proprietorship goes not off of the EIN number, it goes off the social security number of the business owner. And that's one of the things that the main reasons why we want to have access to business credit as a business owner, because we want to separate our personal credit from the business. I don't want your business venture to fail and you to have to fail with the business. I only say, only in the movies should the captain go down with the ship. When you're in business, if your business fails, you're going to jump off that ship and build another one. You're not going to sink personally with that ship. It wouldn't make sense. All right. And businesses, I had great business ideas and I had failures as well.
Right.
All right. So it's not just saying because you have a business model that is up and going that it is going to succeed. I always tell you should have an exit strategy for failure if it does not work.
That's good.
That's great information.
Yeah, that's excellent information. So my next question is, I'm a new business owner. I've just started my business. How do I prep myself to build up my credit score? What do I do? Because I don't know.
All right. So the first thing you need to do is get access to your business credit profile. When business owners come to me, majority of the time, they don't know if they have a business credit profile or not. I'm like, do you have a business credit profile? I don't know. I haven't seen it.
Yes, sir.
So the first thing you can do is, if you guys are listening, you need to write this down. You can go to dnb.com, which is dunnandbradstreet.com. D, the letter D, the letter N, the letter B.com. And Dun & Bradstreet, they have a business search. If you put in your business name and your address, they will tell you if you have a credit profile established on your business. Now, once you actually go there, you might have a business credit profile, but it has not been linked to you individually. They're just saying we have data on this business. So what you're going to have to do, you're going to have to create a personal credit profile and link that business credit profile to your personal credit profile. What they're going to do is they're going to ask you some security questions to verify your identity to make sure you're the business owner. But once they give you access to that business credit profile, now you can start looking and seeing the history. What we're seeing a lot of times is the history that's in the business credit profile doesn't match what the business really does. Because the way this works is, let's say I'm a brand new business owner. I call Comcast Cable to open up a mobile phone for my business. Comcast gives me access to that phone because it's a brand new business. A phone is not that risky. They didn't give you a phone, a phone. I get that phone from Comcast. Comcast is now going to report our business relationship to Dun & Bradstreet. The problem is when I filled out that that Comcast application, I put all the details of my business, but when Comcast gave that information to Dun & Bradstreet, they just put a brief general credit profile information for me. I didn't really put all the details. That's like me writing a resume for you. I only know your basic information, your name, where you work, but I can't write all the details that you would write on your own resume. This is what I did when I worked there, XYZ. So it's a more profound credit profile versus one that's there. And most businesses just have a credit profile that's there versus one that has been optimized for lending. Optimized is saying you have actually gone in and you put your correct, what we call NACIS codes, your set codes. And these codes actually say what the business is. And you have some business, how can I say it? Some business areas that are more high risk than others. For example, I'm a credit repair company. A credit repair company is considered a high risk in the financial industry.
Right.
Credit repair is actually with strip clubs, pawn shops, and gun shops. All right. That's how risky they think the credit repair business is, which is a totally different. We're not even on that scale. Right. However, that's how they label it. And because of that, even with great credit scores, I have banks and lenders that won't touch my business, all because I'm in this restricted area.
That's right. And that's the same thing with real estate companies too. They don't like to give us money.
Very good point.
Yeah.
Real estate companies, anything. So the name of your business plays a very big major role. So I hope they're not listening. I'm gonna give y'all the tea. Credit 360 is a credit repair company. That's what I do. The services I provide are credit repair. However, the legal name of my business is Credit 360. I don't have credit repair attached to the legal name of my business. Therefore, I'm trying to go under the radar of being under these restricted industries. Okay. Even though the name is Credit 360, it doesn't say specifically what services I do. All right. And because of that, we're kind of going below the radar. However, I have, real estate investors. I have individuals who have financial institutions and they have the name investment or real estate in the name of the business, and they're being restricted on funding and lending because they consider high risk. And what's the bank's positioning behind that is, we don't want to give our investment to someone who's going to invest our investment, right? It's too risky. That's like me saying, hey, give me $100,000. I'm going to invest in Bitcoin, but I'm going to pay you back. You'd be like, well, sit down, right? So investors are very hesitant to give somebody funding to invest. And that's one of the reasons why small businesses are very limited with getting access to funding when they're just starting as well.
Wow. Good.
Great information.
Okay.
I'm sorry, I feel like I'm just talking.
No. I mean,
You listen, you give some great information.
And when I don't interrupt, right, it's good, right?
No, exactly.
Wow.
Exactly.
I'm speechless. Wow. I love it. So what are some things that make a business not ready for business credit? Tell us that.
So the first thing is also going to be personal credit. When you get access or you try to get access to lending or funding on the business, they're going to want to look at the personal credit. And a lot of business owners come to me and say, well, why do they care about my personal credit if I'm actually trying to start a business? Because who you are personally has a characteristic on your business. So
People
for example,
change.
if you're getting ready to take a flight from MIA to New York, do you want that airplane to pass FAA inspection? I'm asking, that's a question.
Yes.
Of course.
What about the pilot who's navigating that plane?
Of course.
Right? Because the plane could pass inspection, which is your business, but if this pilot is suicidal, we have all these passengers at risk.
Yeah.
So the same thing from a business standpoint. They're looking at it, yeah, we understand that the business is sovereign, but we're concerned about the actual navigator of this business because you can actually be the one that drives this business to its death based off of your decisions financially. All right. So that's the reason why they're looking at personal credit. Get your personal credit in line. That's the first thing.
No, go ahead. I'm going to wait till you.
All right.
Dr. Karen, I know that. She got questions ready.
Right. And the second thing is getting the business in line to look like it's in business. I do a lot of business owners who they actually have a viable business model, but because the documentation is not correct, number one, as we already discussed.
What documentation though?
Yes.
So some of the things, so like I have a lot of business owners, unfortunately, when it gets to the lending side, they look at the small little minute things because it's getting you access to money.
Right.
It's a risk. So even something as simple as having a domain name to your business. So let's say the name of my business is Credit 360. A lot of people might have credit360@gmail.com. Unfortunately, from a lending standpoint, that shows a mom and pop business. You would never deal with the president of Nike, Publix, Walmart, and they would give you a Gmail email address that actually gives them their business and contact information. All right. Another thing is a lot of times we have our businesses running to our home address. Now, home-based businesses, don't beat me up, y'all. I'm the messenger, right? I'm just telling you how this works. Unfortunately, home-based businesses are put in the mom and pop category because they actually do a research analysis on the address that you provide to the business. So whether it's residential or commercial plays a role from a lending standpoint because if it's a commercial-based business, they feel it has more opportunity for growth versus a home-based business. All right. Another thing is bank accounts. A lot of business owners don't have access to merchant accounts. What we're doing in today's time, we're using Cash App, Zelle, all these different, backyard, what I'm going to call funding sources or payment sources. The problem with the backdoor payment sources, they don't normally document effectively the way it would on a merchant account. A merchant account is getting access to be able to take debit or credit cards through a outside source and have it actually sourced into your business bank account. What that does is, number one, it provides actually our income history. So it makes it a little bit easier for banks or lenders to give you access to credit because they're going to, anytime you apply for a loan or anything, one of the things they're going to do is say, hey, give us the last 3 months of your merchant account. If you don't have a merchant account, that's already a red flag. What major brand do you know out there that won't take debit or credit cards? Go ahead.
Wow. So a real estate company, they don't take, let me take that back. I was about to say something about not taking debit cards and credit cards, but what we do that. So,
but it's not a driver of income for the business, right? You're doing it.
So what you're saying to me as a business owner, I should not have things coming to me from Zelle or Cash App? Because that's good information if that's the case.
It's very difficult, especially like with some of these smaller like food truck businesses where you're dealing with a customer for 5 minutes, and they're just sending you access to funding or their payment for the simple fact they're just paying for whatever goods or services you're providing.
So my sister has a beauty salon, but her clients Zelle her and they Cash App her. So you're saying that's not a good standard?
It's not,
okay.
Okay, so what happens is if you have a merchant account, number one, it shows banks and businesses that you're global. Global, right? If I am a transaction business, I am only taking Cash App and all these other little, what we're going to say the backdoor sources. Global business, again, shows growth and opportunity. And it also lets banks and lenders know that someone somewhere else has the opportunity to be your client. And that's a bigger playing field.
That's good.
Bigger playing field.
That's really good.
Yeah, a lot of small businesses need it. They really need to hear this information because we always think like, oh, just sell me. Sell me for the hair, sell me for this, with it. And that's
Right.
the first thing you do here. I even seen that some people buy it, Zell me, Zell me, Zell.
Right.
And now Zell, is now you have to pay taxes now on the money that you're getting over a certain amount of money. So yes, so.
Yeah, well, because you have these, like these, what they call, gig business owners, right?
Yes.
The people who are doing ride share, they're doing these where their monies are possibly been changing hands, but not necessarily being accounted for income and being taxed, right? And, unfortunately, the whole underlying message behind this is taxation, right?
Exactly.
Right? Taxation.
Yeah.
Unfortunately, if you're not putting into it, they're not necessarily using it as income. And unfortunately, most business owners, what we wind up doing is, if we made $100, we tell them Uncle Sam we made $10, right?
Sure.
And there's a benefit to a tax standpoint from that, but on the funding side, that's where we're starting to handicap and handcuff ourselves, right? Because we don't have access to that. It winds up being a very big deal in the long run.
Wow. So two things that you did say, well, you said so much, but for business owners, get a domain name. That's number one. They should do that. So start with the small things and work on that so that you can put yourself in a position to start being able to get the grants you said. And the last thing is, borrowing money. You think borrowing money is good for businesses?
There's good debt and bad debt, right? There's such thing as investing into something that has a rate of return. For example, I was dealing with one of my clients. He's in the lawn business and he wanted to buy a $25,000 stomp grinder. And I'm like, that's a lot of money for a stomp. In my mind, he's like, well, I turn down at least 6 to 7 jobs a week.
That's
I'm
good.
like, well, how much is the average cost of the job? He says it's somewhere around $300. So when we're looking at the revenue, he can possibly make $6,000 on this stump grinder on a payment that that's only an outage of $1,200 a month.
Exactly.
Right. So that's a form of good debt, not necessarily bad debt.
That's good.
Exactly. So let me ask you something. I know you're saying something about grants, and I know people ears probably perked up to that. Where can they also look for some of these grants for their business to help fund their business?
There's a lot of grants that are available. The first thing I would say, you start on the ground level, right? When it comes to grant, and the ground level is going to be with your county.
Okay.
Right.
Yeah, I know the county definitely has a
So
lot of
if you're
grants.
down here in Miami, okay, that's going to be the mom and pop grant. They normally give anywhere between $3,000 to $5,000 per grant cycle or per year for that particular business. But then I also sit on the committee for MD Action Committee. I'm one of the evaluators for their small business capitalization grant. For that grant last year, we gave out, I think, to roughly about 40 different businesses throughout both cycles, a $2,500 grant and also a $10,000 grant. All right. And these are some of the, this is the jumper cables to your business. Is it the gas? No, but it's the jumper cables to get it turned over. And then it's your job to provide the gas, which is normally going to be the credit side of it.
Gotcha.
That's the sustainability.
Here's a question, because it looks like it's that time for us. So it's that when people get business owners, and I've been one too, when we write a grant, most times we're denied because we don't know the language that they want us to know. So is there somebody that you personally know that if somebody's looking for a grant for their business that they can come to, or can we call you?
You can possibly call me. But I will possibly answer any questions that I can. And some of it, you don't necessarily need a grant writer. And this is nothing against grant writers, right? Unfortunately, small businesses normally don't have the capital to invest into something that might not materialize, right? And that could be the money that you're actually investing, could be your rent money, could be, your electric bill money. And these things, unfortunately, from a business owner, they don't have the capital to invest into something that won't materialize. So I suggest there are free sources out there. That's the reason why I say go to some of these grant platforms, because they provide you with the actual technical assistance to actually excel in the grant, right? It's not like they're giving you this grant application and they're trying to tell you to figure it out. They have technical assistance partners. I know on the MD committee that I sit on, there are technical partners that will sit down with you individually and help you fill out your own personal grant package.
Oh, wow.
Right?
Okay.
Which I think is very important.
You have to give out your number again. Call him, call
Yes,
him, call him. Give out your number, because it's that time.
You guys can reach me at 305-235-4848. Once again, 305-235-4848. My name is Andre Coakley, and I represent Credit 360 Credit Repair, where we love helping good people with bad credit.
Oh,
All right.
wow, I like that. I like that.
And again, thank you so much, everyone, for joining us. My name is Tamika Moses, broker owner of Robinburg Realty, and I can be reached at 954-404-4646. Take us out, Dr. Karen.
All right, I'll take us out. Don't forget that information is good, and you can come on our Instagram page or Facebook and listen to this message again. I am Dr. Karen Lewis. I am the host of the Real People, Real Talk, and Real Estate Radio, and we're here the first and third Saturday at 10:30 a.m. And if you're looking to go to real estate school, check out our website, urbanrealestateschool.com. And we are signing off. We had such a great time, and it's that time. Bye.
Thank you.